Good evening. My name is Anton du Plessis and I'm the CEO of Zinnwald Lithium. I'd like to thank TPI and Vox for hosting this evening's webinar and giving me the opportunity to talk a bit about the European lithium sector and Zinnwald's place within it. By way of background on the company, Zinnwald Lithium is an AIM-listed resource company whose main asset is a 50% interest in the Zinnwald Lithium project, which is a late-stage development project located in Germany. We acquired the interest in the project from Bacanora Lithium via an RTO, which was completed late last year. Bacanora remains a substantial shareholder and saw the transaction as a way of giving the project the focus and means to advance independently while they concentrate on advancing their primary project in Mexico. We acquired the asset because we see it as having several attractive features and as being sufficiently advanced to have a good prospect of benefiting from what we anticipate to be the strengthening market conditions in the lithium sector. We also believe that the combination of skills that our board brings, coupled with a highly experienced project team on the ground in Germany, will deliver value over time. Why lithium in Germany? I've put up a quote here from Commissioner Elżbieta Bieńkowska of the EU that I think gives a good sense of just how important the development of a vertically integrated battery manufacturing sector is to the EU and informs some of the steps that the EU and many of its member states are taking to nurture the industry. We feel that this is a very important backdrop and represents an opportunity that Zinnwald Lithium is extremely well placed to benefit from. In terms of the broader lithium market, we see phenomenal scope for demand growth in the coming years. The rapidly dropping cost of manufacturing lithium-ion cells is driving new applications, which is resulting in a step change in demand. In the past, the main use case for lithium-ion was in portable devices, using only a few grams of lithium. Now the main driver of demand is in EVs, which use tens of kilograms of lithium. We also see the rapid adoption of the technology in commercial vehicles like buses and vans, as well as in stationary storage applications. All this translates into a significant need for new lithium supply, which is subject to the timescales and complexity of getting new mining projects approved, financed, and into production. We believe that this will result in a supply-demand gap developing in the not-too-distant future with concomitant impact on pricing. The EU in particular is emerging as a very important driver of demand. Governments are pushing the pace of adoption of electric vehicles, in particular by providing a carrot in the form of subsidies, as well as a stick in the form of ever-tightening regulations. European automakers, in an effort to meet these goals, are committing ever large amounts of capital to transition their businesses to EVs. Some faster than others, but there is no denying the scale of the effort, with VW alone committing 60 billion euros. Also, as renewable energy becomes a bigger part of the energy picture, the importance of storage to smooth out variable production will only increase. Lithium-ion batteries are increasingly becoming a viable part of grid-scale storage and grid balancing services, and this will represent potentially huge demand going forward. Drilling down further, Europe and Germany in particular are becoming important battery manufacturing locations, with several very large-scale factories currently being developed. In fact, the largest lithium-ion battery factory in the world currently under development is LG's battery factory in Poland, which will ultimately produce 70 gigawatt hours per year. We believe the build-out of battery cell capacity will drive pressure for localization of the supply chain for this industry. And at the moment, there is no European production of battery-grade lithium products from local ore. So as you can see from this map, our project is extremely well located in the heart of all of this activity. In terms of the project itself, as I mentioned before, it is located in Germany. It is about 35 kilometers south of Dresden on the German-Czech border in an area that has a very long history of mining. It is in fact part of the same ore body as the Zinnwald project over the border in the Czech Republic. As a matter of fact, in this picture on the right here, you can see the border post underground in the old mine. As I mentioned before, the project is at the heart of the European auto sector. And this is demonstrated by the fact that VW is now producing its new mass market electric car, the ID.3, at its plants in Zwickau here and Dresden here, both very close to our projects. The DFS was completed in June 2019, which contemplates an underground mine and associated processing. The mine license is in place, and we're well advanced on the permitting process for the mine. In terms of downstream production of battery-grade lithium products, the project will adopt a conventional flow sheet, We believe that the project has flexibility to produce a range of products. The ability to produce lithium fluoride and lithium carbonate were confirmed by the DFS, and we've recently begun a test work program with regard to lithium hydroxide. We have a team of 5 people on the ground in Germany, led by an industrial chemist with over 30 years of experience, who has been involved in the project since inception. This slide just gives a little bit more detail on the output of the DFS. I won't go through it in detail, but some of the highlights are a pre-tax net present value of 428 million euros and annual average life of mine EBITDA run rate of about 58 million euros. Total construction costs around 160 million euros, and then you see the production up here. The byproduct will be potassium sulfate, which will be supplied to the European fertilizer industry. This next slide just provides an overview of Zinnwald and the other hard rock lithium projects in Europe. As you can see, there are not that many projects, and within this context, Zinnwald is relatively advanced. And its location in Germany, the fact that it has been awarded its mining license and is fairly far along with the permitting of the mine, are all, in our opinion, differentiating factors for the project. In terms of our objectives for this year, 2021, these include pushing forward with the permitting process at the mine. We're also advancing test work related to expanding the scope of the project to potentially include the production of lithium hydroxide. I mentioned this before, and the reason for it is we believe that it will be very helpful in discussions with off-taker to have a broader product set. Other important areas include initiating detailed front-end engineering and finalization of site selection for the chemical processing plant. Alongside these work streams, we will also seek to advance discussions with potential off-takers and funders. To finish off, just a recap of what we believe to be the key investment highlights for Zinnwald Lithium. We believe the company is an exciting opportunity to gain exposure to an advanced project in the European lithium space. The project has a superb location in terms of safe jurisdiction and proximity to end markets. It's also able to access a skilled workforce with the necessary chemical expertise available in the region. We have a clear plan to take the project forward and an experienced team to do it. The sector backdrop is also supportive with the transition to EVs beginning to gain real traction. We're also well capitalized for the current phase, having completed the RTO with around 5 million euros of cash in the company. Thank you.
Excellent. That's a presentation from Anton there. Good presentation, Anton. And are you ready for the questions?
I am. Thank you, Justin.
We've got a few of them here, and some of them are a bit long-winded. In fact, they know a lot about the project there. So let's get into it. So the first one, given that the EU has added lithium to a list of critical materials that it plans to support locally, do you expect to go further by introducing specific steps or incentives in an effort to ensure longer-term source and supply of the raw materials that remains local?
Sure. I mean, I think when you look at incentives that governments put in place, a lot of it is ultimately driven by industry and what industry wants, and politicians listening to that. So in the early phase of what the EU wants to do, they clearly want to drive the whole battery sector forward. And if you look at where they've been spending their incentive money, it's mainly been on the battery end of that supply chain. And I think as that battery capacity gets built out, and I think they recently announced about 3.5 billion euros of incentive funding, and a lot of that has gone to battery factories. I think as that gets built out and people start to look at what's really needed to make that happen, and they look at the current supply chain in the industry, which is somewhat dispersed around the world, that adds bottlenecks, it adds cost, there's security of supply issues. I think then attention will turn in greater focus to actually where that raw material is coming from, and the importance of having some local supply. And then I think more incentives at the mining level will come through, and I hope that does happen, because at the moment I think it's a little bit skewed more towards the battery makers rather than the raw material makers, and I think that needs to change.
Yeah, yeah, okay. Next question. What advantages do you have being located in Germany? There's a bit more to that, but I'll leave it open. So Germany specifically, and maybe just, in Europe as well, I suppose.
Sure. Well, I think, as I said in the presentation, Germany is really the heart of Europe's auto industry and also the chemical industry. So auto industry obviously important in terms of final user demand and what's driving final user demand. I think German automakers are increasingly getting focused on what's really going to be necessary for them to be able to meet demand for EVs. You've seen VW obviously expanding their production, going to mass production on a few models. The others are potentially a little bit further behind on that, but that's pretty key, and it's important to be close to that industry and seen as an important supplier ultimately into that industry. And then the second thing is being in the heart of the chemical industry. And I think what some people sometimes don't really realize about lithium production, especially if you're aiming to produce to battery grade lithium, is that's almost as much a chemical business as it is a mining business. And having access to the right skill set that can make that happen and can ensure that you're ultimately able to produce a sufficiently high grade and consistent product is very important. So we can tap into that skill base in Germany. And in fact, the people we have on the ground at the project include several industrial chemists with many years of experience. So I think that's a very valuable part of our, what differentiates our project.
Yeah, yeah, absolutely. And as far as the environmental impact of lithium mining, how does Zinnwald compare to others in the market?
Sure. So I mean, if you look at lithium mining or where lithium comes from at the moment, it's really two broad buckets of source. So you've got the South American brine producers, and they have the benefit of solar evaporation, and that significantly reduces their kind of energy impact, the CO2 impact. But they're also located in deserts, and so the water use is a major environmental factor for them. And then on the other hand, you've got the Australian spodumene producers, hard rock producers, and the process of making lithium from spodumene is quite energy intensive. It also, the way they're structured is the conversion then happens in China. So you're shipping concentrate to China, and then if the product is ultimately being used in battery factories in Europe, you're then shipping that all the way to Europe. So by contrast, we're obviously local. Everything is local, so that reduces the shipping, which is quite a major part. And then with Zinnwaldite concentrate, it's not as energy intensive a process on the pyrometallurgy. So whereas the spodumene producers have kind of two phases of pyromet, we only have one. And so from a CO2 perspective, we think we will be lower, materially lower than the spodumene producers.
Yeah, yeah. Okay. Next one. Given how hot the EV sector is, has it been a surprise that battery sector manufacturers have to date at least appeared somewhat reluctant to sign far-reaching long-term offtake agreements for lithium and associated metals?
Look, I think they have been signing offtake, and like all things, it will take a while before perceived shortages come through in the market, and when people start to perceive that access to supply becomes more critical. So I think you have seen some players like Tesla taking steps to become more involved even at the mining end of the spectrum. Other players have been a little bit slower on that, but I think it will become something that is a critical success factor. And I think you will start to see them taking a more active interest, whether it's supporting projects through putting in place upfront offtake financing or taking strategic stakes or things like that. But we've seen it in other commodities, and I think we will start to see it more and more in the lithium space and cobalt and nickel as well.
Yeah, yeah. Well, that was a sort of supplement question there, saying that, do you expect such signings to spur some others, and maybe there'll be a rush by other players worried that they, may be left behind? Do you think it'll start to build like that slowly? When you see some big signings going on, others will rush to try and make sure they're not locked out of the market, I suppose.
I think so. I mean, I think, in the same way that I think EVs for the big traditional automakers is a small part of their business currently. And I think the way they look at supply is they do it in the traditional way they've done other things. So, you know, they don't, I guess, feel the need to have offtake, you know, steel supplies and so on, because that's much more of a commodity. I think as sort of the battery technology becomes more of a key differentiator for them, and as the chemistries that go into those batteries becomes more of a key differentiator for them, I think they're going to turn their attention to really controlling that whole supply chain. And when availability becomes an issue, it will sort of become clearer that they need to take a little bit more action there. I think what the industry is missing at the moment is the lead time on new mines and increasing production from existing mines, etc., is quite long relative to the other parts of the supply chain that are more sort of manufacturing driven. And when that realization sets in, I think the industry will probably panic, and the auto industry will probably panic and start looking at ways to make sure that supply comes on stream. We haven't seen a lot of evidence of that yet, but you know, as you said in your question, you know, when some players start to do it, it starts to build momentum, and you can expect that to continue.
Yeah. Could you discuss in more details the funding strategy for your next stage of development, and how much is likely to be needed, and by when will you need to have this available?
Sure. So, I mean, for the project as it's currently sort of outlined in the DFS, overall capex is 160 million. But really, before we get to that sort of final construction decision and sort of finalizing any kind of financing package, there are a number of steps we still need to go through. So we need to finalize the product mix. That's very important. We're currently undertaking test work around lithium hydroxide and expanding the project to see whether we can produce lithium hydroxide. And finalizing that sort of product set is quite key to gaining offtake and finalizing offtake. And offtake is a key step on the way to financing. Likewise, we need to finalize site selection for the chemical processing plant. We need to finalize the permitting process, and we are quite well advanced with that, but there are a number of steps still to go in that. We also need to finalize some detailed engineering, etc. So a lot of steps before we can really get to a sort of final picture on financing. But you know, as you look at construction financing, it typically comes in several broad buckets. So there's your straight sort of debt equity, sort of commercial debt type of packages. There's royalties, there's offtake financing or strategic partners. We're going through a process of looking at all of those, alongside the other work that we're doing, so that we can put in place a number of options for the board to decide what's really best and what delivers the best value for the project.
Excellent. Okay. Next one. Bacanora Lithium is presently a 44.2% shareholder in Zinnwald. How exactly does the relationship work with your largest shareholder?
So Bacanora put the asset into us because they're more focused currently on their Mexican project, and they felt that putting it into a dedicated vehicle was the best way for both highlighting the value of the project and also helping it to advance, giving it the correct focus to attract financing and management and get it advanced. But as you say, they do remain a major shareholder, in fact, our largest shareholder, and the CEO of Bacanora sits on our board, and that's very valuable to us because he and they have a massive depth of knowledge and experience in the lithium space. And it's very helpful for us to be able to access that. And we look forward to continuing that partnership as we go forward.
Excellent stuff. Why do you think you trade at such a big discount to other European lithium players, particularly since you are already at DFS stage while others are at PFS stage?
I mean, all companies believe they are valued at a discount, and I'd say we're no different. we've obviously moved the value up quite materially since we did the RTO at the end of October, but we think that there's a good road to follow. So I think the fact that there are other companies valued higher than us out there is actually a good thing for our shareholders, because it kind of shows the roadmap of where our value can actually go. It's often ironic in the mining space that the closer you are, the more advanced your project is. The harsher sometimes people look at it from a valuation perspective, because the more work you do, the more you can see, and therefore the more risks you can see in a project. Whereas the earlier stage you are, it's kind of all on the sort of speculation of what's to come. So it's a little bit the curse of being more advanced and being sort of comped against other players who perhaps less well advanced. So I think it's a good thing, because it shows that we've got more upside to come.
Yeah. What is the progress on the divestments in Ireland and Scandinavia?
So in Ireland, we've got the Avitan project, and in Scandinavia, we've got the Bramberg gold project. I think as we said at the time of the RTO, neither of these are really the core focus. The core focus is very much the Zinnwald project. And as such, we'll look to either partner or sell those projects going forward. We're not in a hurry to do that. They don't absorb very much management time at all, and also the holding cost for those projects are very low and manageable. So we're not going to let them go for nothing. We'll continue to discuss with people what can be done with those projects, and we've had a number of conversations on those. It's a case of finding something that works for us and for our shareholders.
Okay. And one more. At what point do you anticipate to explore the other two licenses in the region, which may have the potential to increase the project's resource base and life?
So we've got two other exploration licenses in the region, and we picked those up exactly because they could be valuable additions to our overall resource. So we continue to do a bit more work on those. So we'll do some test work and see if we can develop a deeper understanding of those and how they might fit into the overall project. But that's sort of on our plan for the next 18 months. But it's very much happening in parallel to the other work that we're doing on our core project.
Okay, and just one final one from me. We sort of pre-discussed the lithium market itself, supply and demand, the price of lithium. How do you see it, or what's the consensus of it, or where it's going in the next 5-10 years? Because it seems to me a lot of demand. Of course, you only have a finite amount of supply. There's only one way the price can go, isn't there, or what?
That's certainly our view. I mean, the lithium market is a little bit strange at the moment. I mean, we have seen the price starting to move in China more recently, but the price has been a bit depressed over the last 12, 18 months. And that's a little bit of a function of, there were initial expansions of production, and demand didn't happen quite as quickly. But I think that is going to change as we get more into the sort of exponential part of the growth and demand for EVs and other applications. And I mean, my sense would be that will then trigger or make more visible the supply shortfall that we believe is going to be the case in the market. So I think the general consensus seems to be that sort of mid-2020s you will start to see a real deficit of supply, and I think it will become, that deficit will start to become more obvious to people, in sort of 12, 18 months time. And then hopefully you'll start to see the price moving on the back of that, because the reality is it takes a very long time for these new mining projects to come into production. And the pace at which we've seen, I mean, electric cars will seem to people to be a very small part of the overall market at the moment, but the growth rate is significant, and it doesn't take very long at that growth rate for it to start to become a very material part of people's businesses or the automakers' businesses. And at that point, they will start to really look at where the supply is going to come from, and that then will have an impact on pricing.
Yeah, absolutely. I mean, last set of figures I saw, I think last year, year before, was 3% of the overall market was EVs, and this year, 2020, was 4.5. So that's a 50% increase, and yet they're hoping to get to 30% by 2030. Now that'd be massive uptake, wouldn't it? If it's 30% by 2030, you know.
Absolutely. I mean, you always have what you have to look at when you look at how these markets change, and you can go and look at a lot of other disruptive technologies and how quickly they change. It takes a long time to become a visible part of the market, but what you really need to look at is how often it's doubling. And when you start to get to, I think the people who commentate on these disruptive technologies always say it's sort of around 6 or 7%. Once you get to 6 or 7%, the rate at which that technology then takes over the market surprises everyone, because doubling from 7, it's 14, then it's 30. It only takes 2 doublings from 7% to get to 30%. And I think that's maybe what people miss a little bit with the market for EVs is quite how rapidly it will change. I mean, what we've seen in a lot of European markets in 2020 was EVs or plug-in vehicles getting to be over 10% of the market. Now, you could argue that's because the overall car market was depressed by the COVID sort of issues. But the reality is electric cars continue to grow, or demand for electric cars continue to grow, while for ICE vehicles, that wasn't the case. So is 10 or 12% the right percentage? I think it's probably a little bit high given the other factors going on in the market. But if you just look at where it's come from, it's increasing the rate of growth is very, very high. So I think we'll be surprised at how quickly this grows and actually turns into a very meaningful part of the market, and that has a flow-on effect to the raw material demand, which we hope to benefit from.
Yeah, absolutely. I mean, the tipping point is coming. Who knows where it's going to be, but it's coming. Like I said. Marvelous stuff, Anton. Thanks for doing this webinar, and hopefully we'll catch up again in the not too distant future. Thanks very much.
Fantastic. Thanks, Justin.